Welcome to Inside India. Yes, it is Friday and I'm Amit Singh. These are your headlines. India is set to release December quarter GDP data under a revised series today. We'll discuss the implications. India's Trade Minister Piyush Goyal meets with US Commerce Secretary Howard Lutnick in New Delhi to advance trade deal talks. And there's no breakthrough in the US-Iran talks in Geneva, but mediators say significant progress had been made with more talks expected in the coming days. Oil prices are extending declines. All right, let's get started with JP Yong for a quick check on the Asian markets. JP, what's the color? Is it red or green?
Well, first of all, happy Friday. And unlike your choice of color for your tie right now, it seems that the markets are going the other way. We're seeing more pronounced tinges of red on the final trading day of the week. When you look at how major equity indices across the Asia Pacific or the broader the rest of the Asia Pacific is trading today. You're seeing Tokyo today down by about 0.4%, and the South Korean Kospi also giving back gains in today's session, down by about 0.4%. We do want to take a look at Japan, though, because it is quite interesting to look at this, because one of the reasons also why the Nikkei 225 is in the red today is because of that stronger yen that tends to weigh on exporters, and thus also weighs on the broader equity index. So when you see a strong yen, it's usually inversely correlated to the Nikkei 225, and that's down to a couple of things. One, of course, is expectations of a possible BOJ rate hike in March and April if conditions do hold, at least according, or expectations of rising price pressures does hold, according to BOJ Governor Kazuo Ueda. But there's also this flight to safety that we're seeing after the sell-off for tech shares out in the U.S. that's really weighing on Japanese markets, and it's also weighing on chip stocks listed out in South Korea, with the likes of Samsung and SK Hynix also pulling them down. But what's also interesting today, it might be even more interesting, is the outlier, because there is one clear exception to this pullback we're seeing in Asian markets, and that is Hong Kong. While the Shanghai Composite is trying to stay afloat, you're seeing, at least in Hong Kong, that there's a pretty healthy day. It's been a pretty healthy session so far for most tech shares listed out in Hong Kong on the Hang Seng Tech Index, which is keeping its head and shoulders above water in today's session. The likes, for instance, of SMIC, which is a chip play, a Chinese chip play, actually doing quite well and maintaining intraday gains so far this Friday. But the other interesting divergence we're seeing out there is among the property stocks out there, because you're seeing here that property stocks and developers that are focused on the Hong Kong market, the Hang Seng Properties Index, well outperforming that of their counterparts in the mainland, with the mainland property index also falling today's session. Sun Hung Kai, of course, as we know, one of the biggest developers in Hong Kong, reporting that in their fiscal first half, the profits did jump by about 36% on lower valuation losses. And there's a sense that perhaps the Hong Kong market, at least property market, is starting to show signs of bouncing back or recovering, at least a lot faster than some of their counterparts out on the mainland, which is why you're seeing that one sector is going up and the other sector, at least, is losing just a little bit more ground, with more uncertainty with regards to the mainland, broader mainland property sector, Amitoj.
All right, JP Yong, thanks so much for that in-depth understanding of what's really going on in the Asian markets. The Indian markets, they come online in about 47 minutes. GIFT Nifty futures are indicating that it's going to be slightly muted, as it has been for the last couple of days. The broader Nifty edged up about 14 points, or 0.06%, to close at 25,496.55. But given the losses in Wall Street and Asia, expect that trend to really filter down to India too. Fun fact, 109 stocks did hit their 52-week highs, but 258 stocks slipped to their 52-week lows. That was yesterday. The geopolitical risk and, of course, the AI disruption risk remains prevalent in the global sentiment and in India. The rupee has breached 91 once again, but there's some support coming for sure, and that's what's keeping it above that mark right now. Okay, the Reserve Bank of India. It's a recent liquidity boost which pushed overnight rates towards the lower end of its policy corridor is likely to end after March, bankers say. The move helped ease funding pressures after short-term borrowing costs hit a 10-month highs in January. Liquidity surplus has averaged about 1.1% of deposits this month, pulling the weighted call rate to around 5% below the 5.25% repo rate. Bankers say the step is temporary, not a policy shift, and the RBI is expected to absorb excess cash after March as fiscal year end volatility picks up. This is diverging really from the view that was given by the RBI governor, where he suggested a commitment to continue this liquidity. But let's also get you a sense of what's happening with the US-India trade deal. India's Trade Minister Piyush Goyal did meet US Commerce Secretary Howard Lutnick over lunch in New Delhi to discuss trade ties. Now, this was not something that had been announced beforehand. It came as a bit of a surprise. Days after Donald Trump's sweeping global tariffs were struck down by the Supreme Court of the United States, Goyal signaled trade talks would resume once there's more clarity, underscoring India's intent to pursue a deal with Washington. Before the Supreme Court decision, both sides had already agreed on a framework to cut US tariffs on India to 18% from the 50%. Now, CNBC had confirmed via sources that India had postponed a scheduled trip to Washington, which was aimed at firming up the trade deal. But so far, we don't have a lot of color on whether that framework that was decided on, which also we didn't have much clarity on, will actually go ahead. But US Energy Secretary Wright says that Venezuelan oil exports are set to rise, with more cargoes heading to India, Asia, and Europe. Meantime, Reuters sources say trading houses, including Vittel and Trafigura, have chartered the first very large crude carriers from Venezuela since a new Caracas, Washington supply deal began. The super tankers loading at PDVSA's Jose terminal are reportedly bound for India and can carry up to 2 billion barrels each, cutting transport costs and speeding deliveries. Chevron has also resumed sales to India's Reliance Industries as Indian refiners, they are ramping up Venezuelan purchases while reducing Russian imports, but not following through perhaps on the so-called claim by US President Donald Trump that India is stopping or has stopped Russia's purchases of oil from Russia. Has India's growth story been artificially propped up? That's the question that's been on our mind for quite some time, and the mind of many economists. For instance, Kaushik Das, India's chief economist at Deutsche Bank, had said a while back that to some extent this particular aspect of GDP, the propping up of GDP has been a problem because of something called a low deflator or a single deflator, which we'll get into. And this has also been admitted to by the likes of Neelkant Mishra, a member of the Prime Minister's Economic Advisory Council, on CNBC, in fact, in an interview to me. But today, India hopes to put that question to rest as the Ministry of Statistics will release a new data set, new GDP numbers that are calculated with a new base year of 2022-23 rather than the 2011-2012 one. Nations all over the world have usually updated the basket of products and goods and services that they calculate every 5 years. But for a myriad of reasons, India did not do that. This led to the IMF also raising concerns and saying that perhaps India's data set isn't as credible. They gave it a C rating. The Ministry of Statistics has already said that they hope this change addresses the concerns of the IMF and others. At the moment, India's real GDP grew by about 8.2% year-on-year in Q2 of 25-26, while nominal GDP grew at 8.7% in the same quarter. Now, we ask, what will the new numbers released later today tell us? And will India continue to be seen as one of the fastest growing major economies? And to answer that question, we have a very special guest with us. Taimur Beg is the Managing Director and Chief Economist at DBS Bank, and he joins us right here in the Singapore studios. Thank you so much, sir, for making it here.
Hi,
yeah. I just want to, you got the context right now. Between February 12th and now, when we have the new GDP series, and Feb 12th was when we got the new CPI series, there have been some signals that have emerged. Some commentary, some interviews that have been given by the Secretary to the Ministry of Statistics. I want to understand from you, what have they told you? How are you reading them? Because we're trying to understand what will be the key changes to this new GDP data series that could actually make the data set better than what we had in the old series.
Clearly, the signal is that it is a more pragmatic approach to statistical collection in a country where you still have a lot of informal activity. Mm-hmm. So how do you capture informal sector activity, which is not necessarily part of the entire GST story, part of the income tax story, or the survey of manufacturers story? So then that's the sort of question that I think the authorities have grappled with. Sometimes, especially the 2011-2012 revision, seemed to have been a bit exaggerated on the upside. I recall, I think the nominal GDP was revised up by 20% at that time. But you see, it's a double-edged sword. If nominal GDP gets revised up by a lot, debt ratios fall, but so do revenue ratios. India already has one of the lowest revenue ratios in the emerging market world. So a big upside surprise on the nominal GDP revision would actually make that bad ratio look even worse.
Are you expecting that?
We are not entirely sure because there are mixed signals from the economy. When we hear from large retailers who have a lot of exposure to informal sectors, they haven't been exactly rah-rah about informal sector demand over the last few years. It seems like the pandemic shock, the oil price shock of 22, 23, all of those things have had an impact on informal sector activity that probably does not reflect that 8% number that we talk about when we talk about GDP growth. So perhaps that's a drag. But at the same time, a better collection of data, in my view, is better than misleading signal on the economy. And I really don't think that real GDP number, whether it is 7 or 8, makes that much of a difference, especially if we are seeing top-line growth of companies in double digit. If Indian top-line companies are showing double-digit growth, I'm really not fussed about whether the number is 7 or 8. It's one of the fastest growing top-line growth numbers that we see around the world, and that's what we should be focusing on.
Okay, so many questions that emerge right now. Many analysts, including you, are expecting that nominal growth to accelerate, at least in the coming year, right? What are the immediate implications of that acceleration in terms of, I think, policy or asset prices? And is the new series likely to really alter that outlook?
Right. So real GDP data is something that I focus a lot as an economist. Ratings agencies focus a lot because they use that number to figure out debt sustainability related equations. But when I talk to a private equity investor in India, when I talk to a venture capitalist, when I talk to a startup, real GDP is the last thing on their mind. Deflator is the last thing on their mind. They are looking at top-line nominal expansion of the economy. Are my revenues, by that we mean nominal revenues, growing in double-digit, mid-single-digit numbers or not? Because that's what you want in a typical, strongly growing emerging market economy. Double-digit nominal expansion. That story is completely unaffected by whatever release that we see later today. Because those numbers are audited numbers, they are cash in hand, and that's what they determine discount cash flow calculations. That's what it determines a private equity investor's valuation metric. So to me, we need to sort of keep those things in mind, that nobody in India sitting at a law firm that is carrying out a private equity transaction, no promoter who's trying to raise money is worried about today's release.
There is an impact on sentiment.
Sure.
So, I mean, if the IMF is raising concerns around India's data collection and giving it a C rating as it did last year in November, I think, then, sure, the people that you're speaking to may not be concerned, but there is a larger impact on the market, on the sentiment. Is India's growth story as good as it is being made out to be?
Sure.
So how do you respond to that?
I would respond to that by saying, what are the secular tailwinds to the economy? And what are the challenges to the economy, and putting them on a net-net basis, do I see a good story for India going forward, independent of the actual GDP number? So when we think about GST, I talked about it earlier, that we probably don't capture all of this information about the informal economy when we look at GST data, but let's not dismiss that entirely. The GST buoyancy over the last couple of years, in my view, is a sure sign of greater formalization of the economy, greater transparency in revenue collection. That tells you that economic activity is proceeding apace, which is a reflection of the buoyancy of tax. That's issue one. Second is the investment picture, that even at a time when we have seen emerging market flows really volatile and global investors quite concerned, domestic sentiment toward investing in Indian financial markets has been substantially positive. And as a result, even in 23-24, when emerging market investors were selling Indian stocks, Indian stock market did just fine. I think foreign investors take cue from that. A solid, stable investor base with a solid, stable domestic flow of funds is a catalyst for further foreign flows. So those, to me, are the tailwinds.
Even if we're not super excited about the foreign funds in the last year, particularly, and okay, there's been a shift in February. We can assume that. I want to get into that, but there's also this aspect of just understanding what this new series is going to be about, and I wanted to pick your brain on that. 50 experts. They sat in 5 committees in 40 meetings over the past 2 years to look at revising this data set. Mammoth exercise. Does this exercise then give you the confidence of credibility, given the IMF raised those concerns in the past?
We have to see the fine print. I cannot pass a verdict till I actually see the kinds of revisions actually have been incorporated. So high quantity of meeting is not necessarily a reflection of likely high quality of the data. So quantity, very impressive. Now we want to see the quality. Again, if indeed we see sort of wholesale willy-nilly revisions that go in one direction, then you sort of better have a very good story underlying what's going on. It has to be explained thoroughly, the methodology has to be transparent, and we should be able to query if any misgivings are there with respect to the data. If things like that are hallmark associated with the new release, I'll be very, very comfortable.
Okay. Do you see that happening?
Likely, because to your point that whether the IMF's frowning upon the quality of data or the fact that it's been almost 15 years since we had the last revision, I think the authorities need to get on with it, and that's why I guess there's so much attention on it today.
Are there any discrepancies that will remain a concern despite this new set of data? That you can already say that, okay, this they cannot cover.
Correct. So if we look at, for example, China's reported export data to the US versus US's import data from China, big gulf, and it widens. In a world we're seeing subsidies at the domestic side, tariffs on the external side, there'll be a lot of accounting-related discrepancies, which will be very hard to capture in one set of data publication. So expect external sector data to become more complex and be sources of more upside and downside uncertainty in this world of fragmentation.
We had the new CPI series. You had a Reuters poll at the time that projected retail inflation at 2.4%, but when the data came out, it was 2.75%. So now we've had about 15 days to digest that. So I want to understand from you, is there anything from that revision that acts like a preview for this revision?
So India is not a low inflation economy. Two-ish handle is surprising and likely to be temporary. We do expect inflation to normalize this year, not to 6%, but certainly head toward 3, past 3, and probably mid-3s, maybe even 4. I think it is totally fine. Now, consider the upside. A 4% CPI for the next financial year would mean probably 4% GDP deflator. That would mean double-digit nominal GDP growth, something that we haven't seen for a while. So that is the upside. Second issue is, of course, RBI and its stance with respect to interest rate. Where does it see real interest rate? Does it need to raise rates if demand is very strong? Not particularly worried about that. Again, notwithstanding whatever happens with today's GDP data, I don't think domestic demand in India is so strong that RBI has to worry about demand pull inflation. Real concerns about inflation are on the supply side. What happens to oil, as you were flagging in your earlier segment? What happens to food? Monsoon-related stuff, geopolitical stuff. Those things matter much more for the overall outlook for the CPI than a situation which used to prevail about 20 years ago. That's so much strong domestic demand, both from the public sector side and the private sector side, that we would have high single-digit inflation along with high double-digit. That was a bit runaway train type of a dynamic. I don't think we have that at all, particularly with respect to the public sector, which is actually consolidating.
Okay. I know that you mentioned that the people that you're speaking to, those who think about investing in India, they don't care that much about a low deflator or a single deflator or a double deflator. But we will have double deflation now in the calculation. And feel free to explain this to the uninitiated, a measure of each sector's growth by adjusting what it produces and what it spends for price changes. Which is fascinating for someone to understand in economic terms. What is a double deflator and what is a single deflator and how this is changing and how this will impact the GDP number. What I'm trying to understand is that what was something you did not have visibility on when there was a single deflator that was perhaps used the way it was, and now you'll have this double deflator.
I think the only way we can make this palatable for our audience in the next 30 seconds or so to say that it's a netting of prices impact on the overall consumption basket. Some prices are going in this direction, some prices are going in that direction. Sometimes you don't really have a methodological approach to capture all of those things. A double deflator approach will be, again, for the sake of this audience, a way to capture that in a more realistic manner, netting out offsetting impact of various directionalities.
Yeah, but I was trying to understand from MOSPI, from the Ministry of Statistics, whether they can tell us a little bit more about how they'll even calculate that double deflator, because that's something we don't have insight on.
No. So we're looking forward to it today.
Yeah, okay.
When we look at around the world, so let's say start with the US, which used to be gold standard for a wide range of statistical coverage. There, the question has always been that as an economy expands and the quality of goods with respect to technology improves, do you actually capture the value of those things in products? Or if you say that electronics prices are flat, does it mean that inflation is flat, or actually inflation is declining because the quality of those electronics products is rising? So stuff like that is very hard to capture.
Very quickly, in one or two sentences, the liquidity narrative, the RBI governor telling the media a couple of days ago that we stand committed to providing liquidity, but then banks coming out with this report, well, through the media, that the RBI's liquidity support will wind down in March. Your comment?
I think the overall issue is, what is the financial sector doing? Are we seeing interbank liquidity tightening? Are we seeing bank-to-bank lending related rates going up? If that remains stable, I don't think we need that much support from RBI.
Okay, well, appreciate it. Thank you so much, sir,
Thank you
for joining us. That was Taimur Beg from DBS Bank joining us in the studio. We're going to take a short break. Be back in 2. Welcome back. There's no real breakthrough from the US-Iran talks held in Geneva yesterday, but technical level negotiations are set for next week in Vienna. The talks come amid a major US military buildup in the Middle East, with Washington warning of possible strikes if no deal is reached. Iran has indicated it could make concessions in return for the removal of sanctions and recognition of its right to enrich uranium. Iran's Foreign Minister Abbas Araghchi spoke about that after the talks concluded yesterday.
On the issue of sanctions relief, we clearly presented our demands, what we expect, and what needs to be achieved. Regarding the US unilateral sanctions, their various dimensions, as well as the discussions in the UN Security Council, the differences of opinion concerning these sanctions and what should happen were clearly stated from our side. It was decided that in the next session we will go into this discussion in more detail.
Also, Indian Prime Minister Narendra Modi on Thursday said India-Israel free trade agreement, well, that will likely conclude soon. This after Modi was with Israeli counterpart Benjamin Netanyahu and oversaw the signing of 17 documents following talks about cooperation in artificial intelligence, manufacturing, agriculture. This was during his 2-day state visit to Israel. He also added that the two countries are set to pursue joint development in production and transfer of technology in defense, further strengthening military ties. The Prime Minister, also voiced out India's support for the Gaza peace plan, saying it has opened a pathway to peace.
Humanity must never become a victim of conflict. The Gaza peace plan has opened a pathway to peace, and India has extended its full support to these efforts. We will continue to engage in dialogue and cooperation with all countries in the future as well.
And Canadian Prime Minister Carney arrives in India today for a 4-day visit aimed at diversifying Canada's trade ties. His trip is expected to cover cooperation in research, education, artificial intelligence, quantum computing and more, according to India's High Commissioner in Ottawa. Reports also suggest Carney's visit could formally revive negotiations on an India-Canada free trade agreement. High-value agreements are also on the table, including a potential uranium supply deal, potentially worth nearly $3 billion. This diplomatic reset comes just a year after heightened tensions when Canada's intelligence agency accused India of foreign interference. And, New Delhi has strongly denied those particular allegations. Also, as Carney seeks stronger trade ties with New Delhi, Canada's Bombardier says it sees long-term growth potential in India as the country ramps up aviation infrastructure. Around 60 Bombardier business jets currently operate in India, but limited infrastructure has constrained expansion, with India building about a dozen new airports. Bombardier CEO Martel said that they could open the door to higher sales. We're pivoting now to China. Beijing has removed as many as 9 military officials ahead of China's 2 sessions next week. CNBC's China reporter Elaine Yu has the latest on this story and a look ahead to the key meetings next week. Elaine?
Yeah, military modernization is really part of China's 5-year plan, and these removal of the 9 military lawmakers ahead of the 2 sessions really shows Beijing trying to clean up house before the political spotlight turns back to China. But all eyes are on the 2 sessions next week that will set the economic, social, and security priorities for this year, and also will release China's 15th 5-year plan. And on the morning of March 5th, the Premier Li Qiang will announce various economic targets for this year, including GDP growth, inflation, fiscal deficit, and unemployment. And he will release the government work report as well. And we're also expecting the full proposal for this year's fiscal budget. So more details on fiscal spending. And other key themes include tech innovation, tech self-sufficiency, especially on AI chips, and also industrial upgrading. And there will be a focus on boosting domestic demand as well. There's been a lot of rhetoric out of Beijing about that, but observers expect things like innovation and tech self-reliance to really take center stage because of the U.S.-China tech rivalry. And fiscal spending will be one thing that investors are watching very closely, as Julia Wang, Nomura CIO on CNBC, earlier was saying that markets are really expecting China to do more on that front, on fiscal spending. So we'll be watching that very closely as well. But an analyst with the Berlin-based Mercator Institute for China Studies also says the next years will determine if China can tackle internal and international imbalances as well for that high quality and sustained growth. So we'll bring you more next week.
Thanks so much for that, Elaine. We're back in 2 with more on the latest VC investment trends in India. Welcome back to Inside India. Japanese markets are back from their lunch break, and take a look at this. Yes, mostly positive, but when you have the heavyweight chip and artificial intelligence related shares down, that's what happens. The whole market is slightly down, just 0.3%. But let's bring you up to date with what's really happening, because we got inflation data from Tokyo today. Our East Asia reporter, Lisa Kim, has all the details to make sense of that very interesting wall. Lisa, tell us more.
Hey, Amitaji, that's right. So Tokyo area inflation for February came out this morning, and core consumer price, which excludes fresh foods, for February cooled for the third month in a row, coming in at 1.8% due to energy subsidies and cooling rice prices. And core inflation came in a tad bit better than investor expectations, but it fell below the BOJ's 2% target for the first time since October of 2024. And we want to pay attention to Tokyo inflation numbers because they're released weeks before nationwide figures, so it's seen as sort of an early indicator of a broader trend. And in reaction to the numbers, JGB yields are falling, and that's because investor expectations of an early BOJ rate hike has been reduced. So yields on the benchmark 10-year JGBs are down 1.25%, and ditto for 5-year ones as well. I touched base with Takuji Aida. He's an economist who is also on a panel of advisors for Prime Minister Takaichi after the numbers were released, and he told me that he expects Japan inflation to run in the low 1% range in the second half of this year, mainly due to weak domestic demand. And he told me that he expects the BOJ to stand pat until December. And of course, today's inflation print comes on the heels of a Japanese media report that Prime Minister Takaichi conveyed her concerns about BOJ rate hikes during her meeting with Governor Kazuo Ueda last week. And of course, it also comes on the heels of Prime Minister Takaichi nominating 2 reflationists to fill up her BOJ policy board. Prime Minister Takaichi is a pro-stimulus figure, and she's seen preferring a more accommodative monetary policy, and her recent BOJ nominees have sort of reaffirmed her commitment to an easy monetary policy and an expansionary fiscal policy, sort of a reversal, because after her major victory win in the snap election earlier this month, she sort of signaled that she's more on board with BOJ's rate hikes. And so, in reaction to all of this, the yen is trading in the upper 155 handle, while today stocks are down a little bit, but in the bigger picture, Japanese benchmark Nikkei 225 closed at record highs for the previous 2 sessions. So far, stocks have reacted quite well to the developments, but today they are down just a tad bit after closing at record highs yesterday. Back to you, Amitaji.
Thanks so much for that, Lisa. I'm very curious to know when Tokyo has not acted as a bellwether for the larger Japan inflation numbers. Of course, we'll come back to you for those details as and when we have more information in the coming weeks. We're counting down, of course, to the market open in India. This is how we're shaping up. It's not looking like a very positive, rosy picture at this point in time. We're looking at a muted open as expected for the last couple of hours. Remember, Nifty 50 was barely up 0.06% at 25,496. Slight positive. But the rupee managing to stay above the 91 figure, strengthening just a little bit against the dollar. It's been a concern, but somehow there's something happening in terms of potentially intervention support from the Reserve Bank of India, and that's what's keeping the rupee below 91. Now, India's markets regulator has overhauled the mutual fund rules, adding new scheme categories, tightening portfolio overlap norms, and allowing greater exposure to gold and silver. The changes affect India's 900 billion mutual fund industry, which is huge, and has seen over 12 trillion rupees in equity inflows over 5 years, really driving the domestic economy narrative. SEBI also introduced new categories, including life cycle and sectoral debt funds, taking the total to 40. It also capped portfolio overlaps at 50% in key categories and mandated stricter true-to-label investing for gold and silver. The regulator directed mutual funds to use domestic stock exchange spot prices to value their holdings instead of using prices from the London Bullion Market Association. And in the startup space, venture capital firm Z47 recently led a $6.6 million Series A round in manufacturing startup Woodswork. The New Delhi-based startup had previously raised about $3.5 million in seed funding in 2023, backed by Z47, then known as Matrix Partners India, alongside Nexus Venture Partners. Z47 manages more than $3.5 billion in assets and has made over 150 investments across financial services, consumer, B2B, manufacturing, and enterprise AI. Notable investments include fintech firm Razorpay and ride-hailing platform Ola, where it was an early backer. And that's why joining us today is a VC investor who successfully built Bazi, one of India's first online marketplaces, and then sold it to eBay India, a man who really spots future winners early. His name is Avnish Bajaj, and of course, he's the founder of venture capital firm Z47 that we were just talking about. Yeah, you know, you remembered Matrix Partners that you co-founded in 2026 you renamed it from Matrix Partners to Z47, and you did that in the last couple of years. The number 47 is interesting because you share the Indian government's vision to see a developed nation status by 2047, something that the Prime Minister has stated. And I want to start by just acknowledging that aspect of how you think, and I appreciate you joining us on CNBC. I want to also dive straight into what's happening right now, the zeitgeist right now. You manage about 3.5 billion fund, 3.5 billion across 4 funds, 212 investments. And so I guess the question is, how do you read India's startup story today? You've seen the boom, the correction, the second wind potentially, but where does it stand in this new uncertain AI world of disruption?
Oh, Amit, thank you for inviting me. Very happy to be here. Thank you for acknowledging the 47. It is something that we are truly inspired by, and I think many of us who are of Indian origin, even outside of India, it's rare that you get an opportunity to be part of a country's journey. So typically once in a generation, right, to becoming a developed country. So thank you for that. So coming to AI and India and startups, if you ask me, I had a podcast in Jan 25, about exactly a year ago, where I felt depressed and I said so. And I felt this was around, maybe it was after the DeepSeek moment. I'm now losing track of time, how quickly these things move. It seemed like nothing was happening in India. We had made we have 2 large AI infrastructure investments in India called Krutrim and Mesa. We have many apps investments, but I wasn't seeing the buzz. You already dated me by talking about Bazi. So I've been doing this now for 25 years. I wasn't feeling that buzz. I felt that buzz before with e-commerce, with SaaS, different things, crypto even. It has changed. It changed maybe in the last 6 to 9 months. So India never had its own ChatGPT moment. ChatGPT in the US got people excited, and you're seeing one thing after another, right? We hear about the Anthropics, the OpenAIs, but there's the Lovables and a bunch of other things. Those things have started to happen in India now. There's a company called Emergent, not in our portfolio, which has gone from 0 to 100 million ARR in the last 8 months. That's, in my view, partly India's ChatGPT moment. We have companies that are doing India to the US, and we can talk about that later, which are ramping up in labor substitution type of plays very quickly. So net excited, starting to see entrepreneurship. There are 2 levels of it. One is India to India, and one is India to global. India to global has also taken off. You have entrepreneurs starting in India, moving to the US in 3 to 4 months. We have a company in the BFSI space called Greylabs.ai. It is providing voice agents. We have a company called Ulka that is doing AI financial companion which is AI-led. So it's happening. What was looking like a worrisome situation is now becoming exciting. AI summit and the government push always helps. Until now, other countries were talking trillions and hundreds of billions. Our AI mission at that time, we were talking about, let's say 10,000 crores. Look at the AI summit now, 200 billion, 300 billion. This is what we need. And we can get to what is pulling people to India, because for a change, there is both a supply pull and a demand pull. And I would love to talk about it, but net, startup ecosystem is back to its exciting phase.
All right. Z47, back Kruthrim, you mentioned it, labeled India's first AI unicorn. It's focused perhaps more on LLMs. And you also invested in NESA, which is focused on AI infra more. But you also said that founders should chase business problems, not the AI label. And you hold both of these positions at once. Is that a sign of that, that AI is big, it's coming, and it's unstoppable in India now? Where do you see also the biggest opportunity in India?
There yet, Amitoj, in India. In fact, I just saw Block, which runs Square, announce a 40% layoff. Not that we want people to lose jobs, and I think people just need to retool. But the pace of adoption in the US is accelerating, starting with the large tech companies. But I am aware of even, very traditional old school companies like Canadian Tire in Canada, Walmart in the US, they are going very, very fast at it. Indian enterprise adoption is not there yet. But if you look at the demand side pull, ChatGPT, I believe we are now either the largest or the second largest market in the world. That's on the demand side. Same with Anthropic, same with a bunch of these guys. Where have we invested? When you say, holding two opposite thoughts, well, part of my job is to do that in cognitive dissonance, but it's actually the stack, right? There's the infra layer and then there is the apps layer. Infra layer, NESA just raised $1 billion plus from Blackstone. Kruthrim is actually not doing LLMs, it's doing an intelligent cloud and replacing that. There are companies like Sarvam, which are doing the LLMs. The apps layer, you have to look at India to the world and India to India. And that's where I'm saying we are seeing both now. Enterprise adoption is slower than expected, but from what I hear when I talk to people, it is no longer a question of is AI hype, is something to be done or not. It is about where do you start and how do you start. India to the world is at a different scale and wrap up. So both are happening at the same time.
Okay, since you mentioned Block, and I was coming to that, the company behind Square Cash app and backed by Jack Dorsey, the co-founder of Twitter, he's using X now to put this information out, which is quite hilarious. He says that most companies will follow suit in the near future at a time when he's announcing that he's laid off more than 4,000 people, reducing the workforce to just under 6,000 for his own company. What's your outlook on jobs versus AI in India?
It's brutal, and I wish I had a clear answer. Short term, there will be disruption. There is a chart, I don't know if you've seen it, Amitos. There's a chart that talks about, it's a curve, it's a timeline of people with high agency, people with low, medium agency, and it, kind of diverges very, very slowly over a period of time. And then comes AI, and then it diverges very fast. It's the classic K shape. The high agency one goes up a lot, and the low agency goes up. Jobs will be replaced by AI, but new jobs will come. Just next to this release that you have seen, there is somebody I respect who's been at the cutting edge of AI adoption for the last 2 years, who sent a blog out saying his dependence on AI has gone from 90% to 65%. Because it can't do everything. You have to be in the middle of the workflows, you have to do the customization. So the people who are getting laid off, which is tragic, need to reskill themselves and become high agency in AI-led tools and AI-led tooling, right? This has happened so many times before. Where are the typists? They are computer operators. They're reskilled. So there will be disruption along the way. I believe I'm a little bit of the Elon Musk view of the world, which is the world will prosper, productivity will go up, and if GDP overall goes up for the world, more jobs will get created, just in places we don't know yet. I can tell you for sure one of those places is AI tooling.
Can you give me an example of how you as a VC are putting your money where your mouth is? When you say skilling will happen in India, when the skilling efforts, the upskilling, reskilling efforts of India's government have not necessarily borne fruit. So can you give me an example?
We met with the CEO of AI Mission and we spoke about this. See, if you go back to the IT boom and then the BPO boom, and I don't know whether you were here on the ground, Amitoj, but there were companies like NIIT came out of the IT services boom, which was the private company training people. Aptech came out of that boom, private company training people. When retail industry and airline industry was taking off, you had a bunch of these air hostess academies skilling. I don't think this is up to the government. It would be nice if the government gives incentives for people to start private training institutes at scale, but we need to do that. What kind of jobs? That I'm very clear about. The nature of jobs, for example, where India has a big edge in terms of engineers, we all know what people don't realize. English-speaking AI engineers, English-speaking iPhone engineers, English-speaking Android engineers, we are number one in the world. The number of commits happening in GitLab, for example. So those engineers need to be retrained. How do we do it? If companies start, skilling shops, we would happily invest in them because I see it as a big deal. One term which is very common in the US and plays to India's strength is something called FDE, Forward Deployed Engineer. And that forward deployed engineer is basically an AI native engineer who sits at the customer and tools for them. It could be an industry. It could be an absolute industry, and I'm hoping that we become the FDE capital of the world. I'm hoping that the whole global capability center shifts more and more to AI native in India. So I think the opportunities are clear. We just, it will be short-term disruption.
Okay, I love your optimism, but it's not at all a surprise to me, given that you yourself told the world that you failed, 7th and 8th, and then topped in 12th, and then became, a brilliant VC investor. So I see that optimism. I want to talk to you about Ola. Another investment of yours, one of India's pioneering ride-hailing and mobility platforms, co-founded by Bhavesh Agarwal. Everyone knows him in India. You partially exited Ola Mobility, exited Ola Electric completely, stayed in Bhavesh's AI venture, Krutrim. What's the true signal global investors should take from this change that you're doing on not just what your company is doing, but also the India story?
Just so you know, and I think you know this, how our business works, you yourself said 4 funds. So it is fund by fund. So the Ola Mobility was in the oldest fund, which is mature. And when we got an opportunity, we exited. Ola Electric was from the next fund, which we have exited fully in the public markets. We have VCs, we hold private stock, not public. Ola Krutrim is from the latest fund. But the signal that you mentioned is an important one, right? Consumer, EVs, AI. That actually in some ways summarizes the story of India startups and India VC, which is very exciting. Earlier, with the penetration of technology being what it was, the startup ecosystem was pretty much reflecting the composition of Indian GDP, which is consumer-led. So consumption businesses. Now, all consumption businesses are still there, but you saw deep tech overlaying, and now you're seeing AI overlaying. So that's the story of India startup to take away from that.
Okay, I wonder if you could clear the air for us on one particular report that came from the Ken, that barring a few investors in Ola Consumer, other investors have actually been lobbying for the firm's buyout, while Bhavesh Agarwal has delayed a third attempt to IPO once again. What's going on is not clear, and I just want to understand, is Ola Consumer deprioritized now in your view? How do you look at it?
So you really expect me to react to Ken reports? Then every morning there'll be a different one. Look, there are 3 strong players. Ultimately, if you're in India, the question is usage happening or not? How businesses exit when there is a real business. Is there real usage of Uber, Ola, and now even Rapido? Credit to them. Yes. And I was in a small town, and actually neither of the others were available, and only Ola was available. So I'm not going to talk about investors' issues and Ken reports, but net, look at the business. Focus on the business. Is the business have strong traction? Yes. Exits will follow with the markets.
Okay, tell us about Krutrim. What's the future of Krutrim? What have been the hiccups? What do they represent in terms of the risks associated with AI in India? But like you projected in your first answer, that because there's a government push, it's looking very positive in the near future.
This government push. See, if you look at if you look at the cloud era and you look at India, look at all the tech companies in India, where are they hosted? They will be hosted on Google's platform, they'll be hosted on Microsoft's Azure platform, they'll be hosted on Amazon's platform. For 15, 20 years, these companies, so basically zero value capture in India and all the money going out, right? These companies, credit to them, have built outstanding infra and solutions and cloud solutions over 2 decades. So it made sense. AI gives a wedge to disrupt it. And the data protection and privacy laws are pushing for things to be hosted here. Sometimes, these guys don't want to have their data centers in. So it's a massive opportunity to take AI, migrate from cloud. See, legacy software, let's say there were millions and millions and millions of lines of code. Say, A, that millions and millions and millions of lines of code you can make like this. B, you don't need it. The entire layer has changed. So you can move from cloud to intelligent cloud. And that's what Krutrim does. You can move from cloud to hosted services. That's what NESA does. You can move from all the OpenAI models to local models, which is what Sarvam does. So I think we should be all rooting for these companies. Obviously the global companies will succeed here, but we need some local value capture, and we need our local entrepreneurs to also win. I don't think we need government push. I think government support is great. We really appreciate it. These entrepreneurs have to compete with the best in the world and win. Now, here's what happens. These solutions are 30 to 50% cheaper than your AWS, Azure, and so forth. That's a big deal. But no Swiggy, Zomato, and all will switch just because it's 30 to 50% cheaper. They'll switch if it is world-class, better service, and 30 to 50% cheaper. And that's the plan.
Fascinating. I'm glad you mentioned this data point, because there's an article, an opinion piece that's out, and it has a fantastic headline which says, India is the AI world's most valuable unpaid intern. And the point that they're trying to make is because they don't keep their advantage, which is data, inside India, and needs to have the regulations and the protections to do that, to weaponize it, to make sure that the money stays within India. I appreciate you joining us right now, Avnish Bajaj from Z47. Really fascinating insights. Really appreciate you joining us, and we hope that you come back very soon. Let's also continue to talk about ride-hailing in India. We were talking about Ola. CNBC's Emily Tan joins us now for more on that. Emily, you spoke to Uber in the last hour. Tell us more about that conversation.
Yep, thanks a lot to Amitoj. And this conversation to do with Uber launching into Macau. This is a market that they used to be in just under 10 years ago. They exited it, and this is the first launch into an Asian market in a number of years. So with this, they said that they see a big gap in their portfolio in Macau. Hundreds of drivers that have signed up. They launched on February the 3rd. Launching the Uber taxi model, plus a cross-border service, Hong Kong to Macau. 20% of the industry there has already completed trips using the Uber taxi model, and they're looking to grow aggressively, they say, over the next coming months. Now, I also, of course, started asking about India. This is a key market for them, the biggest by volume, in fact, hyper-competitive. There's homegrown players like Ola and Rapido, and then even the government-backed taxi service that was just launched. So I asked him how they're competing in this market and their strategy. This is Dom Taylor, Uber GM.
Look, there's never a dull day in India, that's for sure. We have been operating there for nearly 12 years. It's a huge market for us globally. It makes up a huge amount of our volume, as well as where the majority of our first rider trips are occurring every week and month. When I think of the India market, at the center of it, I would cast it as creativity and innovation. What we're seeing is that innovations that are coming out of India are becoming some of Uber's fastest growing innovations that we are scaling globally. So let me give you some examples. The motorbike is a key way that people move around India. At the moment, originally Uber started with cars, but we've added auto rickshaws and motorbikes, and now what we see is that the motorbike product is one of the fastest growing products that Uber has globally in many African, Latin American, and my hope is more Asian countries in the next few years. Likewise, the intercity product that I mentioned for Macau, Hong Kong, that was a product that started in India. And so we continue to see vast amounts of innovation coming out of India. And finally, I'll say we have one of our largest tech hubs outside of the US in India. And we are absolutely taken back by the quality of engineering talent that we are seeing in India. We will continue to invest there. And so it's this great coming together of our technology hub as well as our local team driving extreme creativity and innovation, which makes India one of our most exciting markets.
So Uber has a very diverse offering in India, 2- and 3-wheeled. This is the auto rickshaw, the scooters as well, but also looking to soon launch Uber into the air. And I'm talking about something like the Jetsons. And this is Uber Air, powered by Joby electric air taxis, and we're going to be seeing that by the end of this year, in the first market being Dubai. So we're waiting for those announcements coming through from Uber. Back to you, Amitoj.
Thanks so much for that fantastic interview. Obviously Dubai's traffic situation requires that kind of a development. But what India needs is better Uber cars, just not the ones that are looking old and, not smelling nice. That needs to change. Really appreciate that interview. All right. Now, we have the Indian markets joining us. It is, of course, we don't have much time to get into it, but take a look. As we suggested earlier, it's looking down. And of course, the rupee also, while it is strengthening, just flirting with that 91 mark. We'll have to wait and see whether it gets some support from the central bank. We'll leave it there. This was, of course, Inside India. Keep watching CNBC. Access Middle East is up next.